A huge question that I ask on a frequent basis that floods my Instagram DMs is, Ryan, what is the best time frame to trade Forex and what is the best time frame for entries? And that's exactly what I'm going to show you right now. So the best time frame for you to trade on as a Forex trader will determine on your style of trading. So some people like to trade intraday, scalp or swing. For me, I'm an intraday trader, therefore I use multi-time frame analysis. And that's what I'm going to take you through now, step by step. I want to give you a very easy, simple and short system to follow so you can not only spot direction, but find good levels to take good, profitable trades from. And first of all, we're going to start on the daily. Now, a great way to remember what we're using a daily for is daily, D for direction. That's what we want to look for, direction. What way is the market moving at the moment? What flow are we in? Are we in an uptrend or a downtrend? Are we within a big bullish or bearish flag? So on and so forth. But I don't want to get into too much detail about this. We're going to keep it really simple today. We're just going to try and spot a nice simple trend. So for example, we're going to open up a chart shortly and we're going to see if price is in an uptrend or a downtrend. So all we're looking for is price making lower highs and is price making lower lows. Keep it really simple. We don't have to overcomplicate this. Just look at the direction. Well, yeah, price is in a downtrend. And of course, we're coming up to a level of resistance as well, which was this last low. Inside the golden sweep, we call this a double zone. A double zone is nice and strong. It's a good level to trade from. So what we're looking for here is a continuation of this higher time frame, daily downtrend, but that will be a reversal on the lower time frames, like the 1 hourly and 4 hourly time frames. So once we locate this sort of level, look brilliant. We know what we're looking for. Are we looking for a buy trade? A buy? No, we're not. We're looking for a sell only, a short position. That's all we're looking for from this level. Why? Because we're in a downtrend, and two, we've come back to retest a level of resistance and the downtrend, which creates a double zone. So let's go into the laptop. Let's take a closer look at this in a real world example. So we just jumped on the map book. I'm going to show you a really nice clean example. Now, it's important that you remember that not all the examples will be this clean, but I'm just really trying to get the whole structure across and the point across of exactly what to look for and where. So you can see here right now on the daily time frame, daily for direction, we can actually see very, very clearly. If I actually get my brush out, we start off with a high, we formed lower, lower high, lower low, lower high, lower low, lower high, lower low. We're now pushing up, we're making a lower high. So you can see here we're in this kind of pretty good downtrend, to be honest. We had this really big aggressive push here. Then we started a lower time frame uptrend, as you can see, but we're still in this overall downtrend. Why is the downtrend still valid? Well, first of all, you can see we got this low here. So this is the official last low. And that was validated because we actually broke it. So we broke it. So we can mark this level across. So that's our official last low. Now for this trend to actually be no longer valid, we actually do need to break this level here. So we need to come right away above. And then we make a new high. And then, of course, we can potentially look for long positions. So that's where we start to get the trend change. So let's just take this back at the moment. Here we go. And let's start drawing some really good levels. So first of all, we're going to mark the downtrend. So we're looking for a good 3 points of contact minimum, which we've clearly got. 1, 2, 3. It's actually fourth touch. Then we can actually see underneath this point here. So the third touch, we've got a nice little level of support there, which actually held. Price pushed back, hit our trend line, and then broke it, confirming this as the previous low. Mark this level across. This is that double zone that I was showing on the board, isn't it? We've got a downtrend here. Of course, we've got a horizontal zone as well, acting as a strong level of resistance. This is all we're looking for, guys. Keep it really nice and simple. So we're just looking for a double zone downtrend and horizontal level of resistance. Potential reversal here on the lower time frames and a continuation on the higher time frames, continuation to the downside. So that's what we're looking for, keeping it really nice and simple. We've got to overcomplicate this. We just found our direction by looking for lower highs and lower lows. You can see we're in a nice simple downtrend. So let's jump back on the board. Let's go down the time frame. So now it's time to zoom in and take a closer look on the 4 hour time frame. So we had our daily directional which was, of course, following this downtrend. So what we're going to look at now is what's happening at this level here, So we zoom into this portion of information on the 4-hour time frame. So it's 4 hour. Prices come down, we push back up. We'd have had something a bit like this. And of course, we've got the downtrend. So we're coming into this nice double zone once again. And this is where we want to start looking for confluences, because usually, once a daily time frame pushes up, we've had this big push, we've had this exhaustion, we're expecting another push to the downside, you get clues. Price action leaves clues. And we can expect something, and this is just one example of many, you might start to get a bit of a double top going on here. 1, 2. So although we're looking for a continuation of the higher time frame downtrend, we're actually looking for a reversal on the lower time frame, because this leg here on the 4-hour time frame won't just push straight up. It's actually going to be an uptrend like this. And then what we're looking for is for this trend to start to change, and then we can look to take a position, and then we can look to make profit. So what we look for example, is a new low to be formed. Price pulls back, makes a new lower high. This confirms we're starting to get a trend change. And of course, we can look to take a short position to target these lows. Really nice and simple. We're just using each time frame to our advantage. Daily for direction, 4-hour time frame, we're looking for extra confluences to see if there's any market structure, if we're actually rejecting this level. So 4-hour time frame is for rejection. Daily direction, 4-hour rejection. Again, let's take a closer look at this on the computer, see if we can really zone in and show you guys some really good tips. So zooming in on a real world example on the 4-hour time frame, this is where I'm going to show you step by step a good 4-hour rejection. So what I really like about this is you can see we're kind of in this 4-hour uptrend, a little bit messy, a little bit choppy, but nevertheless, you can see here as we pushed up to our level, we did actually start to make those all important higher highs, which we're still creating, and of course, higher lows. So you can see we're in this uptrend pushing into my double zone, my double level of resistance. Now, this is where we're looking for that lower time frame reversal, that 4-hour time frame reversal, potential for a 1-hour time frame entry. So what we can see here, first we've got this double top. So we've come up once, we've come up twice, and we're pulling back. Yes, we are still in an uptrend. Why is that? We did make a higher high there. And of course, we are still making a higher low. However, like I said, we've got some strategies in the golden suite where we can actually look for a MS 2.0 entry from this level here. Trading within the structure, we can actually look for an MSB entry. Or if we're going to trade the breakout of the structure, that's where we actually start to look for. We mark the neckline off. And we start to look for a nice MSBC entry. So we've got all three strategies, they work together. This is why they're so powerful. And also if you miss one, you can get the next one. You miss this one, you get the next one. So there's three strategies all work together. So what we're looking for here now, we've got the 4-hour rejection perfect. We can zoom in. And we can see we had a little bit of a spike up there, nothing too great. We pushed back down, we've come up. We had a really nice 4-hour spike there, high test. Another high test there. We have this little bit, we have got a bit of a wick, but we are engulfing the previous candle. So you can see we've actually got 1, 2, 3, kind of 4 rejections going on here at the moment of this level. Big telltale sign. This is when I go down to 1-hour time frame and look for my entry. So first of all, we've done the daily time frame. This is going to be to look for direction of price action. 4-hour time frame, we're looking to see if there's any good rejection in the form of market structure. Now we're going to go down to the 1-hour time frame. This is where we want to pinpoint that entry. So we're going down to the 1-hour time frame. Again, we're going to zoom in to that 4-hour market structure. It could be a head and shoulders, could be a double top, it could even be a flag. But the best structures that I find are double top and head and shoulders, because they start to show that we're getting that trend change. So once you zoom into this double top, so let's say this is the 4-hour time frame double top, we want to zoom into this on the 1-hour time frame. It will look a little bit different. We're going to see 4 times more candlesticks because we're going from the 4-hour to the 1-hour. And what this will actually look like, you'll see within a double top, some small little uptrend like this, we may start to see some wicks. We may start to see some engulfing candles. We may start to push back down and we come back up. we may see another little wick, for example, and price may just bumble around for a little bit and then start to push down. Again, this is us starting to get some rejection on the 1 hour time frame. So you've got a choice at the moment. You can start to look for more of an aggressive entry across the top here, which is fine. We've got a strategy for that called the MS 2.0. You can actually look for an entry within this structure where we've got a strategy called the MSB. Or you can actually look for an entry on the 1 hour time frame. Once we break out of this level, we create our new lower low and we start to pull back to make a new lower high. We can look for entry there as well. And that's actually what I'm going to show you today. This is part of our MSBC strategy. It's one of the most easiest strategies to learn. Very, very popular, very, very consistent. It's actually the first strategy I ever started using that I created, and it works absolutely fantastic. So what we're going to be looking for now is to locate an MSBC trade, a bit of a directional change. So we've already got our direction. We know we're going down. We've got our rejection. So what we're looking for on the 1 hour time frame is for price to come up. We've got this kind of double top going on like this. We form a new low. We come back into this region of resistance, which was support. Then we wait for our rejection here. And this is where we can take the trade. Nice and simple. We're going with a higher time frame trend. We've got 4 hour rejections. We've got a 1 hour trend change. The probability of you getting this trade into profit and seeing success is now going to be very, very high. You've got the higher time frames on your side. You've got the 4 hour time frame on your side, and you pinpointed a good entry on the 1 hour. Everything here just makes sense. Everything is stacking up. This is called stacking confluences. So we show you this on the laptop. We're going to go into a little bit more detail, and it might not be as perfect as what I've shown you here, but we're showing you some really, really good examples. And once again, I'll show you a couple of good tips to look for as well. So welcome to the 1 hour time frame. There's multiple entries that I can currently see which fit the Golden Sweet strategy criteria. I was going to show you a really nice method at the moment, which I like to use. So there's actually an entry up here for Golden Sweet ones that you're watching this. You'll notice that. And there's an entry here too. But what I'm looking for at the moment is more of an MSBC setup. I'm not going to go into too much detail about that strategy, but I'll show you the kind of the principles. So what we're looking for here is we have this low. We've actually formed a new low now. So this is indicating a potential trend change. We start pulling back. So even though we have pulled back above this level, does not mean that we're going to push back up. Okay, this doesn't make the trade invalid. Don't forget, all these levels will only be average, approximate levels. This is all people trading, pressing buttons. It's never going to be pinpoint accurate. And we can just wait for our entry. So what we're looking for here, prices push down once, twice, we're getting this really nice pullback. We can look for entry. So the entry around this sort of level looks pretty good to me. You can mark off where your stop loss wants to be. So you can mark off the last level of resistance or the previous high, lower high. You can stick your stop loss above there. So this is going to be a modest 18 pip stop. Look to take entry on the close of the candle only. And then we can either target this low for a 1 to 2.8. So that's a 1% risk. So you'll be up 2.8% if you hit TP. Risk 0.5%, of course, you'll be up 1.5%. Risk 0.25%, you'll be up just 0.75%. All depends on your risk profile, but usually we risk 1% in the Golden Suite. So this will be a 2.8% trade. Then what we're looking for is price to drop. Now it's important to remember that we do have this little level here, so we might get a little bit of bounce off this level. It's totally understandable. We understand this will happen. So if price does come down and bounce, we won't panic. Now we're happy with the trade. We're in this lower time frame downtrend now. We've got a big rejection here on the 4 hour time frame, and we're at a nice daily double level in a daily downtrend. So it's looking good. So let's follow on. So mini drawdown, and then we're starting to move into a bit of profit. But there we go. Okay, so perfect. So kind of expected to happen. We find a little bit of support here. You're going to get something like that. I mean, this is quite an aggressive bounce. Would I be concerned about this? Not really, because I'm happy with the trade. I'm happy where my stop loss is. I'm happy with all the confidences that are stacking up. So let's continue, see how we get on. Perfect. So this is actually really nice here. So you can see we've got our rejection count. That's where we entered. And then we're actually just spiking up, just retesting the entry candle. This is actually really nice. This is really nice confidences there on the candlestick patterns. Just really wicking up. That's good. There's a good chance we could drop now. So let's continue on. There we go. Perfect. So we've broken through his level quite aggressively.
Usually these sort of levels, we'd see like an extra pullback and then a drop. Is this the textbook kind of trading? Levels break, they retest. Doesn't happen 100% of the time, but it happens more often than not. So once level breaks, price comes back to find some more liquidity, collect some more orders because we're at a better price now, then of course price is going to move on. Just good to understand what's moving price. So from here, we expect the trade to come back and then drop. Now for us, inside the Golden Suite, this actually provides a scaling in opportunity. So for example, we've hit TP now anyway, because we just target the low. We can see how we've come back to this level, how we've come back. So we could get a rejection here, then look for another trade. We've taken profit. We're already at the low. We actually rejected that low. Perfect. We're 2.8% up. But now we can see what's going to happen around this level, because it could be another trade opportunity available. Oh, and there we go. Literally just dropped straight down. I think that's much of an entry. We've got a little high test there and a couple of dojis. If we scale down to the 15-minute time frame, there's a good chance we could have found an entry there. But for us at the moment, we've taken profit. We're happy with that. And all we're doing, we're just going with the flow. Then what you can actually do, if you want to be a little bit more of a swing trader, you can target these kind of lows down here. I'll never go to the lower lows because sometimes we don't make it. I want to have an easy target. When I take profit, you can target this level. So you could have just took some profit off the table here. Then you can start trading your stop loss and see if you can go for the bigger trade. But that's entirely up to you and your risk appetite. So you're going to go for more like a 1 to 9, but you'd have half a position run, so that'd be like 4%. You've already took 1.4 from here because you closed 50% of your position, for example. And then you're going to go for the other 4. You've got a good chance of getting 5% instead of 2.8. I'm happy to target these lows and just wait to get in on the next trade, so on and so forth. It all depends where the scaling opportunities present themselves. But yeah, nice and simple trading here, guys. We don't have to catch these massive swing moves to make money in the market. There's a 2.8% trade there. If you're doing that every single week, you're going to be looking at the kind of like 12% months, 11, 12% months. They're good months. They're good months. They're realistic months. And they're consistent months. And that's what you've got to look for. You've got to look for that consistency.
Make sure to like, subscribe, and turn on notifications, because the next video I'll be showing you how to zoom into the 15-minute time frames, which will help you with 2 different ways. It's going to help you find a smaller stop loss, which secondly is going to increase your profit, which is of course what we're all here for. So please like, subscribe, notifications on, let me know in the comments, and message me on Instagram, goldensweet_Ryan. Let me know your video suggestions, because this video came from you guys asking for it, and they're the videos that we like to make. So make sure you drop me a message or write in the comments any videos that you want to see, anything that you're struggling with on your Forex journey, and we'll help solve that problem.